Hi everybody, this is Phillip Guan, CPA. Welcome to the classes to teach you how to do the use a trade tax software to do tax return. Now, today we are in class 11 or 12 already. So it's class 12. So this will be the second to the last. So tomorrow will be the last classes, 13. So what I'm going to teach you is the business tax return. In the business tax return, there are three kinds of it. There's a C corporation, like C like the cat. We already talked about it. It's in the example 11. A few days ago, we talked about it. It's uploaded on YouTube. If you have a chance, you can go to search Phillip Guan CPA in the YouTube. You will see all my current year training as well as the previous 2 to 3 years training. Now, this year's training will be more shorter. So, and then the previous 2 to 3 years training will be longer. So if you happen to see this year's training is too fast for you, so you go back to the previous year or previous 2 years that I speed about double longer other times. So that will be, you pace yourself. Or vice versa, if you say, hey, it's too slow, and then you go to this 2024, right? So, and then it's suggesting that you are making, number one, have one computer, and you can watch in my YouTube, and then the other computer, you can have a download software, you can play, you can practice. It's practice makes perfect, okay? It's fun. So let me go ahead to share my screen, okay? And then I'm going to mute. I am converting this one for the Chinese classes, which I just did. So don't worry about that. Okay, let me get to this. Okay, now I will kind of preview you what is the end result. Okay, so Candice, you see my screen, right?
Yeah, I saw your screen.
Very good. Okay, so after we finish, the tax return is the partnership tax return. Is it for the year of 2024 in the far right corner? Okay, so and then in the far left corner, you will see 1065. So that is the partnership tax return. Okay, the partnership tax return could be fit in partnership with Excel or other legal entity. They choose partnership tax return to file. When I go in there, I will tell you what is it. And there's a basic partnership information in here. There's income and there's different kind of expenses. They generate net income. But you can see, but there is no taxes from line 24 all the way to 32 at the partnership level. Well, why? Because it's so-called pass-through entity. And the income and expenses that in a net amount by their ownership percentage, this partnership have two partners at the 50-50%. So one is called Lion and the other one is called Little Angle. Okay, obviously those are all make up name and EIN number, and there's no confidential information used just for training purpose. We take our client's information very confidential, and none of the client information will be presented to the public. So now in here, you can see they will receive a K1 from the partnership tax return, and then that is what they're going to report it as an income. Not only in box 1, but also in box 14, this money is also subject to self-employment tax at 15.3% up to the maximum. So let me go into it, get to the data entry. So now, at first, you get into this EIN of the company, and then get the name of this company, and this is the address of the company. You can go tap this is the zip code of the company. You can type the zip code and then the software will pops up the city and the state as well as the county. That's pretty cool. Okay. So now there's a phone number and what kind of business they are. Okay. And then there's a code for this kind of business right here. Now, if you need to search it, you hit it on the keyboard far left corner, Shift Control, you hold 2 key in there, and then you hit S like Sam. So hold 2 key, Shift Control, and that pops to the search, and then you search what it is. For example, like now, I really cannot. So let's say now, I now right here. Okay. So they've been in business for a long time. They choose accrual basis. So none of those boxes apply. The G. So it's either cash basis or accrual basis. What's the difference between cash basis and accrual basis? Well, let's talk about cash basis first. Cash basis, if you do business and generate revenue and collect the money, you recognize an income. Accrual basis is you do the business, you generate revenue, regardless you collect the money or not, you recognize as an income. So you will have an account receivable. The number in account receivable, the money is not in your hand, yet the income has been reported and the tax has been paid. And vice versa, account payable is for accrual basis accounting, and you order the supplies and you're supposed to pay the supplies, yet you haven't paid yet. In the cash basis, those are not deductible yet. But on the other hand, in the accrual basis, those are deductible expenses. As long as you take an order, you receive an invoice. Regardless you pay or not, for accrual basis, it's a deduction already. But which one is simpler? Cash basis is more simpler. It's more easier to keep track of it, even if you don't have a very system accounting background. But for accrual basis accounting, you have to have someone who really know accounting. And then also at the end of the year, a lot of times you have to do some year-end adjustment for accrual basis. So this is who do this tax return in your company. And then in the far right corner, there's a filing security. So assuming this company last year, they do let's say 800K. So this coming year they do 1 million. So now, and then they also their address, and they hire people and file 940 and 941. The IRS use this to confirm the identity of the company. So those are necessary information for e-filing. If you pick up this client as a new client, you have to get the copy of their last year tax return and get those information. Now, the page 1, we're done. Here's the income. They have 1 million. Well, it's an example only. In the most of the time in your practice, you don't see a company like this, like 1 million in even. So when you see a lot of even number, you have to be asked the client, did you do your bookkeeping right? Right? Especially like in here, all the expenses right now, you still see it's all even number. In my over 20 years practice, I never see a real client like this. So when you see someone like this, that's very possible they did not do their bookkeeping right. They just guessed it. IRS cannot allow to do guessing numbers. You have to base on the support document to do the real bookkeeping. So now, on this one, the input screen of all deduction for the tax return is in the bookkeeping is an expenses. It's the money out. The revenue is the money into the company. Okay. So now in here, from the left side, from A, as you can see, I highlight, I tap A, B, C, D, E, F, G, so far, so on. And then to the right side, from I, J, K, L, M, N, so all the way to E. So basically, where I put accounting, well, far left corner, up, because WA, right? Advertise, like there. They don't have any of those. And their cell phone number, cell phone expenses 5,000. They hire somebody and pay them consulting fee because the lawyer need to ask, for example, maybe in their cases, they need to consult maybe a CPA, maybe a construction, maybe some professional, maybe medical doctor, whatever it is. In their cases, they need another professional consult for them to deal with their cases. So they need to pay a consulting fee. It's their expenses. They also need to pay to issue 1099, unless two of them are corporation. In this situation, they're not. Partnership is not excluded. So in the example, they don't have any of the above. If there is, you input it. And then go to insurance. There's a building insurance, 6,000. There's a liability insurance. And there is a workers' compensation is also a liability. So this different kind of insurance, but they're all lump sum together as an insurance. Okay. So now, and then go to general service, and then also go to legal service and professional service. For example, the lawyer may need to consult another lawyer or other professional. So now, you can see this one and this consulting sometimes a little bit overlap it. But they cannot be double counted. It's either to the consulting or legal and professional fee, not double. Office expenses, process, rent, repair, the salary to pay to the staff, this 100,000, not 1 million. Security, software, supplies. They should have a payroll tax, because as they pay after they pay the payroll, they should have a payroll tax. So for example, the 100K payroll tax will be the employee pay half, the employer pay half. This is employer, 7.65%. They have 100,000 right here. So this is a phone. Okay, utility. So now there is a depreciation right there in 16A. You double click in here. The asset one, there's a conference room table. When they first have it, for 10 years ago, it's already expenses. But you still need to put it in. Is your old client, they are carryover. But if you pick it up from another CPA, you need to input those depreciation. even it's already depreciated. Now this is the new thing, a computer. So in 5 years, so this is 14. So Internal Revenue Code 1245 section. They divide this. They divide this 1245 property. The computer belong to. And they depreciate it, use M, and 5 years. Anything equipment or related could be movable. Let's say if you move out, you can grab it with you. Now, you can move it out, right? It's a printer. Now, the phone server in this situation, they are attached to the building like a fixture. So they need to mount those phone server. They're not movable. They are mounted and they get it attached to the building. They're called fixture. If you move it out, you cannot get rid of the fixture, and that belong to the landlord. The equipment belong to you. So it's a 7 years depreciation. Still the same thing, M. How about you do let's say, the conference room, the floor, you do it. Well, it's a fixture because it's attached to the building. What about you buy a coffee maker? It's equipment, it's movable, 5 years. Copier, 5 years. It's already previous year. So that's all. So now, how this depreciation goes? Well, the depreciation goes like this. Let me show you the actual form. The form like this. The first one, they have been used no more for this year. There's nothing for current. The second one, you spend 5,000. In this year, you have a special 3,000 bonus depreciation. And then the less of 2,000, you can depreciate it. You get 400. So add together is this for this year. So the same thing for this one. 2,500, you got 1,500 special, and 1,000 split it out. You get 200, so you got this. So this one 15,000, and you get 9,000 for the first year bonus, and you get depreciated, and you got this. So you got a total of this. Now, what you are a little bit surprised, the bonus depreciation is different than the 2023, as well as different than 2018 all the way to 2022. From 18 to 2022, anything you input it in that year, you can 100% depreciate. Even you put in December 31st of 2022 for what? For let's say 15,000, you can take a whole 15,000 deducted from the year of 2018 to 2022. 2023 less, 2024 more, less, more. So that the law was making back in 2017, the end of 2017. Okay. The total depreciation go to here, like that. So all the things there. So we get to this. I will double check everything. So you're supposed to go to green check mark from letter A, the box A, right? Like here. B, C, D, E, F, anything related to check and green check mark it. And then after you check everything against the original, it's every letter and each and every number are correct. And then you have to go back to here, one more thing. Under schedule B right here, there's a bunch of questions. The first thing, what kind of the legal entity they are. In this specific situation, the two brother-in-law is a general partnership. What that means is there's no limit liability. So not necessarily the best choices for you to do business, because number one, there's no limit liability. Number two, subject to self-employment tax, pay 15.3% in their personal tax return. Another better way to do it, they can use it as an S corporation to do so. Okay, so now in this situation, when they're 50% or more, they happen to 50-50, right? Like here. I put in here. They're all US citizens. But if they're not US citizens, you have to choose whatever they are from here. Oh, by the way, the United States US citizen is on the top. Before you from A to E, you don't go downstairs to looking for the very first one on the top. Okay. Or you can just type US, they pops. Now, you just put 50, you don't need to put the percentage. And then number 3, we don't need to. Okay. And then it happened to be all no in this situation. Not all the cases are no. But you have to be looking for each and every question to answer. Well, you say, well, I don't know why. So because you may not study, or you're also not a CPA. So when you study accounting and graduate in accounting, and you also get trained, and you should know each and every questions why they are. For example, for this one, for the first one, what that really means is if it is company, the total revenue less than 250K, or the total asset less than 250K, well, the answer is no, because if they all know, they don't need to balance it. And then you say yes. If they're all less than 250K. But in this situation, the revenue is 1 million is over, right? So that's why it's no. But each and every question, the lien for no, there's a lien. Okay. The number 2, there's a tab, there's a one more right there. There's more questions in here. Okay. Also happen to be no. We do not need to do any of the other things. The last year, more likely this year doesn't need to. In the balance sheet, we need to do, this is a balance sheet, we input what they have, like the money in the bank, how much people owe them, and how much money you think you're not going to get it. Those people, I mean, you're not going to get, there's a outside, inside of this 210K, you determine there are 2K, maybe they are bankruptcy, they whatever a situation looks like they're not going to be correctable. So tax exempt security, the asset they will come from the depreciation. You don't need to have to input in here. You come in from the depreciation schedule. This is how much they still owe other people. That's 1.5 million like that. And then they also, that is normally people give you like about 30 days or whatever term they are, right? But in here, they also have some small amount of more than 1 year payable. So they pay off a little bit. Now, this is their capital account at the end. They also distribute, take some money, distribute to the shareholder. So in here, under K, under the fourth one, under 19A, they split like 220 something K by each partner from the partnership to each partner. So because they are 50-50, you don't need to specialty allocation. But if they are each and every partner, they are not taking the money based on their ownership percentage, you need to allocate it. Now, in here, one more in here, right here. You need to put in the code, the date. You don't need to put it in here because if you already in here under the partnership, each partner you choose and then you kind of like check in here. So this is the partner who's going to be like deal with everything. I mean, side the tax return, if there's a running run up, run down, and the dealing with IRS, all this guy. Okay. So, and then you also check what kind of information they are, or what kind of ownership they have, and what is the beginning capital account. So now, after we input all this, here's what you're going to get. Now, here's the partnership tax return on page 1. And then the page 2, this is general partnership. In fact, any of those kind of legal entity could use 1065. Okay, in here, there's a yes and no in here. So you got to check every single thing of those. And whether or not, if you figure out your answer wrong, you go back to data entry to correct it. It's possible. Everybody makes mistake, including me. You just need to double check it. That's why in our firm, we always double check, triple check before we get to our client. Okay. So is it? We are this partner in charge and dealing with IRS. So now this is now the net income. So now need to pay self-earned tax. They take this much money out in total. Those still in the partnership level. And then the next one is the balance sheet. How much they have it. They have 1.8 million in the bank, and people still owe them that much money. Now this is from the depreciation schedule. You get this. This is how much they still owe other people. They need to pay. And then they pay off this one, but they pay off a little bit in here. And they also distribute this much money to each other. So this is the beginning equal to this. This is the ending equal to this. Do you see it? Oh, a little bit off, isn't it? A little bit off. So I need to kind of like, so I need to adjust. So let me see. Oh, because I adjust that, I adjust the payroll tax. So what I need to do is I need to figure out what is the off. 510,393. I look at this. Minus 518,043 equal 7650. That now 7650 is, so I need a minus. I need a minus in that distribution right here. Go to here. Go to depreciation. I cut this one. I double click. I click, paste, and then minus 7650. They give me the E fixed. If I make mistake, I can go back to change it, right? So I was input the payroll taxes in that amount. So therefore, the net income is less. So in here, it's like here. This is what I was add this one in. So now come to here. 51804 will match, isn't it? Right? So they distribute this much less. Now it's all match. The balance is balance. And the beginning capital account matching the beginning of the M2. The ending capital account matching the ending. That means you're doing right. It's correct. This tax return is correct. And then you will see this changes because the last this changes as well as this changes because I input the payroll tax into it. And when I compare with the Chinese version of the training, we did not put the payroll tax into it. And here we have a payroll tax. That's why you see 7,000 something, 7,650 and divide by 2. That is 3,000 something different for each partner. So now I'm open to anyone to ask questions for these classes if you have any. You need to unmute yourself to say so. No question? It's either you guys are good or I'm not that good. Well, nevertheless, it's not that difficult. It's fun. Let me sum it up. The partnership tax return could be applied for any of those under Schedule B 1, A to F, any kind of the thing that could become a partnership tax return. In this situation, it's a general partnership. And when you get into the partnership tax return area, those are basic information you need to fill it in. And you need to make sure the security question have been answered to match the last year so that when you do e-filing, it match. And then you go to put the income in. If you have other source of income, you put in. Do you remember last time when we do Schedule C? When we do C corporation, we have more than one source of income. But in this situation, they only have one because they're law firm. That's just like their legal fee. So all expenses from top to the bottom, from the left to the right, from A to E. And then that should not be, in a real practice, that should not be all even number like this. But for illustration purpose, we just respect the original example from the trade tax software and French for trade tax law provide the example. So, and for the depreciation, we just put it in. Even though I've been already fully depreciated, you need to put it in. Now, asset is something to it's something to movable and use of 5 years. If it's something attached to the building, they call fixture, is 7 years. Furniture, even is movable, like office table, is, and fixture is the same kind in 7 years. Now, there's a special bonus depreciation, but not 100%, but it's good, still good things. And then you also need to make sure to answer those questions with yes or no, not always no. It happened to be no for this example. there are 2 tabs in here. And then they also, when you go to balance it, you need to make sure the balance it does balance. And then also the capital account at the beginning matching the M2 beginning, the ending matching the M2. So they all tie up together. With that, last call, any questions? No questions? You need to unmute yourself to say questions. Okay, if no question, I'm going to say thank you very much for coming for our training, and we appreciate your coming for the training. So tomorrow will be the last day of this section of training, and tomorrow we are going to talk about the S corporation. Okay, so 9 o'clock that we are going to start, and we also start Mandarin first, and then we talk about the English at 10 o'clock, basically the same thing. Now I'm going to upload all this in the YouTube. You guys can practice. All right. Thank you very much. Bye.
Thank you.
Bye.
Bye.
So much.
you.
Yeah. Bye-bye.
Thank you.
Happy holiday. Bye.
Happy holidays.